Hey everybody, good afternoon. It's the 1st of October. It's about 3:30 in the afternoon. What I'm going to be doing today is something a little different than usual. I'm going to be spending a little time today taking a look at a major market cycle, which I believe is nearing completion. Before I get into any of this, as you all know, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So what I'm going to be doing is I'm going to be taking some information from our good friend, good Elliotician, Robert Prechter, and I'm going to be basing a lot of the information that I'm going to be discussing today on a lot of the work that he has done. So what I'm not going to do, I'm not going to be using any indicators. I'm not going to be using anything special here. What I'm going to be focusing on today is Fibonacci, as it pertains to time cycles, which is not something that usually do. But I believe that I have, kind of expanded a little bit on what Robert has put together. And then I want to talk about what implications that may have on the market as a whole. So again, take all of this with a grain of salt, because what I'm about ready to kind of go over with you guys is, to be fair, it could be seen as a little extreme. And what I'm about ready to uncover isn't something that should be taken with any amount of certainty, but it certainly should be taken with a certain degree of thought as we go through this, because this is not anything that I'm going to say is going to happen tomorrow. What I'm going to discuss is going to take literally half a century to unfold. I'm simply saying that we are getting close to completing this. Now, I hope to provide a little bit of evidence to suggest that this is actually happening. If there's any questions in the chat, feel free to ask away. Otherwise, let me go ahead and get my chart up here and make sure that this is coming through okay. I'm going to be looking at the S&P 500, but this, of course, can be taken looking at the Dow Jones Industrial Average as well. Neither one of those are going to provide the history necessary to get a complete understanding of this. So I'm going to throw some statistics over here just so that we can see, what this is. When was the United States formed? The Constitution was ratified in 1788. So we'll say that the beginning of the USA is 1788. All right. And from there, again, something else that we can't see on here, we can't see on this chart, but in the early 1800s, what we have basically from the beginning of the United States, we had, just a slow and steady increase. And then on, about 1835 to 1842, there was a significant correction. And then we have a little bit of an up and down, eventually making ourselves get up here to, to the beginning. And this actually needs to be lower a little bit, but you kind of get the idea that in 1842, there was a major market bottom that was fueled by railways, interstate commerce. There was a lot that caused some issues in 1842. Now, that year is extremely important, which is why I want to bring it up. So again, from the very beginning of the United States, 1788. And these years will provide significant importance as we go through this analysis. Between 1788 and 1842, that spanned approximately 55 years. All right? It was actually, I think, 56 years, but it was very close to 55, which is a Fibonacci number, and that's important. There's approximately 55 years between 1788 and 1842, which again is a Fibonacci number. Between 1842 and the major market bottom here in 1932, how many years was that? Well, that was 89 plus 1. Okay, so we're going to put 89 years. We're talking less than a year difference here. So we've got 55 years between when the United States began and 1842, when we had a major market bottom, and then we had 89 years to the next market bottom, All right, 89 years. All right, so we've got a major market bottom to a major market bottom, marking 89 years. Okay, that's 144 years, which naturally, if you take two fib numbers and you put them together, you're going to get another fib number, and that number is 144 years. Okay, this is all important, and I'm putting this all out here so that we can get, you know, a good feel for what I'm kind of talking about here. So we've got from 1788 to 1932 being 144 years, and then from the market bottoms, the major market bottoms, we've got 1788 to 1842 being 55 years, and then we have 1842 to 1932 again being a major pivot low in the market. Now this is where things are going to start getting very interesting. Realizing that we've got 144 years here, we should be looking at what's going to come next. Okay, so the reason why I'm saying that we are about ready to enter a major 55-year correction, that's one scenario. You know, another scenario is this, what we have seen here. The scenario is this could just keep on going, and it doesn't have to stop, right? But I always try and tell my daughter that what goes up will come down, and you can see here that we just kind of move sideways for the most part, because, you know, here in 1928, the S&P index was only at about 24, and then it crashed all the way down to, the lowest that it got was 477. So naturally, we didn't have a whole lot of action, but once we hit this point, we had a major move up, right? And I said I wasn't going to talk about Elliott wave, so I'm not going to do that, but we had a large thrust to the upside. I think we can all agree there was a major thrust to the upside. All right, so now what I want to do is I want to focus on 1932 through today. Okay, the first thing that I want to point out that the number of years between 1932 and 2021 is 89 years. So we've got 89 years between 1932 and 2021. All right, so we've got that same 89 years right here that we've got from 1932 through 2021. Now, that is, again, maybe that's a coincidence that we're hitting that 89-year point. But there's a couple things that I do want to point out, which are probably, you know, depending on, you know, how analytical you are, how much you love numbers, could send some shivers down your spine. All right, so Fibonacci numbers, let's just talk about them here. So in Fibonacci, we have 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and then I believe the next one is 144. So we've got all of these numbers, and I want to talk about all of these numbers and the importance that they have, because what you're going to notice here is that these numbers are going to work almost in perfect order backwards from 1932. Okay? So from 1932 to the top in 1966, which was right here, that was before we had a major pullback in the market. So 1966, let's just go ahead and lay this out for you. How many years was this? To 1966, that was 34 years. So there's our 34. From this top to the next one, which was at the top in 1987, this was this big wick right here. I want to point out the wick so that you can see it before. Here, I'm going to pull this over, pull this down here, because we're really going to be focusing on this time right here. So you can see we had a major wick right here. That was in 1987. Major wick to the upside. So we can consider that, again, another major market top. How many years was that? 21. So we have 34, and then we have 21, working backwards. From 21, the next one's 13 years. Where does that take us to? Well, it takes us to the dot-com bubble. So from right here to the dot-com bubble, the very top in 2000, and that was a major market top. That was 13 years. 13 years, the next Fibonacci number. So what do we have next? We've got 8 more years. Well, where does 8 more years land us? We have 8 years here, which lands us almost at the very bottom of the corrective cycle. So we've got 34, 21, 13, 8. Now what do we have? 5 years. Where does the next 5 years take us? So we have a nice big move up, and then we eventually start a little bit of a corrective cycle. We had a little bit of a push up, but we generally move sideways for 2 years, right? Remember, each one of these candles stands for an entire year of price action. After 5, and again, you could take a look at this 8-year cycle. You could actually pull this out 1 more year. Things are going to line up a little bit better if you move it out 1 year. It's not exactly perfect, but it's pretty close. So if we move this out 1 year, move this in, and then we take this 8-year cycle, move it out, we're off by 1 year on this. But again, these numbers and things, these are all just, we're kind of estimating. But generally speaking, we are pretty close on this. But what's going to happen next here is really going to be interesting. So after 5, we've got 3. What happened after 3 years? Well, we broke out of our corrective cycle. 1, 2, 3, and then we moved up. Okay, we had a little bit of a move up, and then we moved sideways for a year. We actually had a red year the next year. So what that means then, our next number is 2. All right, so 2 years. Where does that take us? Well, it takes us through our corrective cycle and up, big up this year. All right. So then we've got 1 and 1, and that's where we're at right now. The next year took us 2020, this 1 year cycle, big move down. Of course, it ended up, but this was a major corrective cycle in the market. Big move down, a 1 year cycle. And then the next is 1, because again, Fibonacci number is 1 twice, then 2, 3, 5, 8, 13. What we're building here is the fact that we've gone from a 144-year cycle to the completion of an 89-year cycle that follows Fibonacci almost exactly, with the exception of this correction here that lasted 9 years, right? But it's close. We'll call it 9 minus 1 to be that 8 number, but everything else lines up very, very nicely. Everything else lines up very nicely. So all in all, I'm still pretty optimistic for the rest of 2021, but what I think we are going to have in front of us, my friends, we are going to start a 55-year cycle. A 55-year cycle, which is going to have rotations, more than likely, following Fibonacci time cycles in the same way. We're going to compress with 144 years from the beginning of the United States through the crash in 1932. We potentially, again, this is all based on just time analysis based on Fibonacci here. We now have 89 years as of this year that take us from the bottom of 1932 to potentially the top of 2021, right? It doesn't have to work this way, but if you believe in Fibonacci, and I think that the market does, we had a decreasing number of years between each one of these cycles, whether it be impulsive or corrective, right? These cycles lasted, very, very closely in line with all of the Fibonacci numbers. So we are likely going to enter a 55-year cycle. So what would be the first cycle in this 55-year cycle? Well, let me just see here. So we're basically looking at the next cycle lasting about 21 years. So if we're going to enter a 55-year cycle, we can't do 34 because that's going to be in excess of 55 years. So the first cycle will be 13 years, then 13, then 8, then 5, then 3, then 2, then 1, then 1 again. Okay? We're more than likely going to move in the opposite order. It's possible that we work in ascending order rather than descending order, but more than likely, we're decreasing from 144 to 89, and then the next logical area for us to decrease to would be that next number, which is 55. So that's why I believe we're more than likely going to be entering a 55-year cycle. Now, what I'm not saying here, and this is important, this is very, very important. I'm going to actually remove this all. What's very likely is, probably we're going to have a little bit of a bit of a pullback, some consolidation, and yeah, I think it's very possible that we do continue moving up. Okay, now a 55-year cycle would take us all the way. Let's just see if we can put this in here. 55 years, that's 55 years, takes us to 2076. That is very hard to imagine that we would be talking about a cycle that would look like this, but look at it in the grand scheme of things. This is really not that much time. And for us to enter a correctionary phase in the market, we don't know how deep it's going to go. It may not go deep at all. It may just continue going up. But what I'm saying is the probability is that we're going to be entering a corrective phase in the market, because the reason why I say that is because of the laws of alternation. From the beginning of the United States to 1932, it just moved sideways. That's very corrective. We can call it accumulation. Then we had a massive markup phase. Again, how long did that last? That lasted 89 years after basically 144 years of accumulation. 144 years of accumulation for 89 years of markup, and now we're entering a 55-year phase of more than likely some kind of consolidation before a bigger move up. So I bring this to you just to point out the possibilities that we may be entering a phase of the market where it is hard to make money. Because what we have created right now, we have created euphoria. Everybody makes money. Everybody is making money right now. All you have to do is buy a stock, and it does nothing but go up. We have created mania. So many retail investors are here. You can't disagree with me that we have more retail investors in the market today than we had 10 years ago. You always hear the stories about what happened back here at the peak, where the guy was getting his shoe shined, and the guy that was shining the shoes was talking about making money in the stock market. That's when the guy that was getting his shoe shine went and sold everything, and that's basically when the crash happened. Now again, not saying that we're going to crash, right? And I'm actually not suggesting that that's going to happen at all. I'm saying that it's very possible that we enter a 55-year corrective market. So again, I will say one last thing about Elliott Wave. One thing I'm going to say about Elliott Wave is what we have right here in the beginning is more than likely wave 1. Wave 1. All right, so if we've got a wave 1 here, and then we've got this wave 2 in the correction, then this big thing that we just dealt with was wave 3, and this is going to be wave 4. We're talking huge, huge market cycles. Huge market cycles, okay? And what that means is we're going to have a huge correction at some point, and a wave 4 usually is consolidating behavior. So again, I don't think that we're going to come anywhere down in these levels, right? Because of where we have marked up to, I don't think it is going to be anywhere near a major correction. I think it's possible that it comes back down here to about the 1500 to 1600 level, which is significant and devastating. You would literally have people jumping out of buildings again. 401ks are going to get smashed. This happened back here. It wasn't that long ago. That was between 2000 and 2008. It was not that long ago. Nice corrective move, but people were jumping out of buildings because they didn't know what they were doing, and they were managing funds that they shouldn't. I believe that it's possible that we enter a 55-year corrective cycle before we enter the next cycle, which after 55 is going to be 34. So we're going to then enter a 34-year massive bull market, and this is going to be after you and I are already gone, right? So maybe some of you young bloomers out there, you'll watch this someday if YouTube is still around in 50 years and be like, man, he was right, and maybe I'm wrong. But the numbers are too coincidental to ignore. The fact of the matter is, since the bottom of 1932, we had a 34-year cycle, we had a 21-year cycle, we had a 13-year cycle, then a 9, we'll call it an 8, right? 8's really the fib number, but we'll call it 9. Then 5, 3, 2, 1 in 2020, and 1 this year for the quote-unquote blow-off top. So we should have a red year next year. And if that's true, then that's going to open the door for me being right. And again, I could be wrong. I might not be right. But the probability says that this is a likely scenario. So be prepared, because we may be creating a major market top right now. And again, that doesn't mean that the top is in. We could still go to 5,000. We might go higher than that. But whatever happens after this year is probability, for probability's sake, it's more than likely going to be a red year next year, and you need to be prepared for that. So be prepared, and I hope that this helped you in some way, and feel free to drop a like if this video did help you. Subscribe and share. I do try to provide information in all of my videos, and I do try and post on a pretty regular basis. Every week or so I'll do some videos. If you need access to our Discord, BitDoctor.org will get you all of the information that you need for membership details to access our community, where we share ideas and trades and everything all day long. But anyway, wherever you are in the world, I hope you're having a good day, good night, and a good evening. Take care, everyone.